Okay, so for the next topic under Module 5, Risk and Return, so we will be discussing about the simple rate of return. Okay, so when we say simple rate of return, this is actually calculated by taking the annual incremental net operating income and we will divide it by the initial investment. So when calculating this, by the way, you have to take note that uh, in the operating income, if you could still remember, uh, we included there in the computation the depreciation amount. So in that case, this is an expense, so therefore it reduces our net operating income. So when solving for the simple rate of return, uh, we need to remember to reduce this amount or expense, okay, which is considered to be a non-cash expense. Okay, depreciation expense incurred by the investment. So this is important because we are considering also this part right here as something that is being allocated as an expense for the spending of the investment. Because if we will take it this way, if the enterprise was not able to invest, then they will not also incur the depreciation expense. So therefore, we have to consider it. And actually, in the normal um, computation of our operating income, depreciation expense is actually deducted. Okay, so this is normally, or the simple rate of return normally is just the same concept with that of the average. However, in this case, we will just use the net operating income or the annual incremental net operating income. Okay, so to understand better, let us take this example. Okay, so we have here the company of Hupana running. So they are looking for adding a stitcher that will add $40,000 to the revenues of the company per year. So the incremental or additional cash operating expenses of this piece of equipment would be $5,000 per year. And the cost of the equipment is 100,000. Its useful life is 5 years with no salvage value. So, in other words, the company here is considering an investment of this equipment, which is the stitcher. So, the amount of investment here that is needed for this equipment is $100,000. And for every year of using this equipment, the company will incur operating expense of 5,000 per year. So aside from this, okay, upon using this piece of equipment, so the company also will uh, receive an additional revenue of 40,000 every year. Okay, so again, this investment or this equipment has its uh, useful life of 5 years. Okay, so based on the data, so we will have here the figures. Okay, so the first one is the annual incremental revenue. So this is the additional revenues that will be added uh, upon using the equipment. So here it is for 40,000. Okay, based on the given data. So the next figure here is the annual incremental operating expense. So every year, upon using the equipment, so the enterprise will incur $5,000 for repair, maintenance, and the like. Okay, and for the depreciation. Okay, so again, if you could still remember, in the definition of the simple rate of return, so we will reduce the amount of the net operating income by the annual depreciation of the investment. So here, to solve for the annual depreciation, so of course that is cost divided by its useful life. So the cost of this equipment as given in the problem is 100,000 divided by 5 years. Okay, so therefore our annual depreciation is $20,000. Next, our annual incremental expense. Okay, so here we have the total. This is the annual incremental expenses already. So this is the sum of your annual incremental operating expense of $5,000 and your annual depreciation of 20,000. So therefore, our total annual incremental expense is $25,000. Okay, and here, the annual incremental net operating income. So here, we have additional income of 40,000 minus the additional expenses. So there is an incremental or additional net operating income of $15,000. Okay, so this is the first step in determining for the simple rate of return. So you have to determine first the annual incremental net operating income. So again, based on our information and example, it's $15,000. So to continue, okay, so the simple rate of return will then be, okay, based on our formula. So that is annual incremental net operating income derived earlier in the previous slide. So that's $15,000 divided by the initial investment cost, which is 100,000. So therefore, our simple rate of return is 15%. Okay, so basically, there is a difference between the average and simple rate of return. You can see it because if you could still remember in the average rate of return, we have computed the average expected amount of cash inflows. Whereas in this simple rate of return, we just determine the annual incremental net operating income. Okay, so that's all for simple rate of return.